Good evening everyone, welcome to this market outlook, 29th August 2022. We'll start here on the S&P futures because New York hasn't opened here, or hasn't opened yet anyway, and here in Sydney it's currently 8:45 p.m. Now things are getting very interesting. If you remember from the last video, it was a turning point, and we can see now that this turning point has really started to show itself. You can see last week 1, 2, 3, 4, and then closing the week Friday with this big bearish down candle for the day, over 3%, which is a pretty significant move for one day in the stock market, especially as this is an index, so made up of about 508 companies last time I checked. So you can see when we hit this wave 2, we've completed this now, wave 1, wave 2 of intermediate, remember? I removed them, but if you look back at the last video, we're completing this wave 2 intermediate of the Elliott wave count, and now we've turned around, pulled back, and I was looking to enter a short. If we go here, I was looking and I entered a short on Friday. Saturday morning here, it came up, rejected 0.5, and I entered this down candle. So things are starting to get interesting because, remember, if we go here, got to select intermediate, then we'll draw. So remember, all this is one wave, wave 2. So if you measure wave 1, that being that long, about 20%, then this up move also around 15-20%. Now if we measure down, wave 3 has to be the biggest wave, so I'm targeting down around, because remember in wave 3 there are 5 waves, so first level about 2950. Look for a pullback here, up into 0.5, continuation past 786, and possibly breaking these lows. So that's intermediate, and what you have up here is minor, minute, vignette and sub-minute waves. Go look into it. It's very interesting theory, and it can be quite accurate, because when you follow the rules and practice, your counting of Elliott waves will become more accurate. You'll be able to better identify turning points in markets. So I'll remove that now. We'll go to gold. Now gold's been interesting. I was expecting this to go up higher for this pullback, however I've come back and retested this level. Is it just a fake? Wiping out the stops, and then we turn around, or will this continue breaking through the previous low at 1681? If it does, we'll have to reassess. For now my bias is still for this wave 2 to follow through, However, if this week we close quite significantly lower, we'll have to reassess, and of course by breaking this we've got to recount, because obviously it's not a wave 2 yet. This 5 wave therefore wouldn't be over wave 1. Silver, much the same, breaking a bit lower. Are we just wiping out stops before trending up into 22.57, or will we break 18.148 and reassess this wave count? Oil, we've been looking to trend lower. Look at this monthly chart, back into 0.382, $80, 65 and possibly lower at 50. If you look back, if we're coming into a bit of a sell-off, you can see in 08 we sold off pretty significantly. 14 as well, back in January to March of April 2020, of course. Look at both 2000s that we sold off, so that would sort of align with the continued bearish movement in the indexes. Sell off in oil, sell off in gold, pull back to these levels, and then we'll be looking for a big bullish continuation, because currently it's still bullish. This monthly chart, it's making a clear high, previous high. So as long as we come down and reject this region, we'll have to wait and see. And at this stage we made a higher low here, higher low, higher low. Currently pulling back into there, we're still making overall higher lows and higher highs, so the trend would still be bullish. That's long term, end of the year coming into next year, and that wouldn't surprise me, especially if it turns out that we have hyperinflation. As the Fed, the Jackson Symposium last week, on Friday, Fed Chair Powell announced some quite firm measures that they're going to follow through, and the market didn't like it, as you saw here on Friday. So oil, overall bias is still to the downside to 80 and possibly $65 and lower. UK oil pretty much exactly the same. They move together. Now the dollar last week, we came up here. We actually, let's let the magnet tool, we actually failed to make a higher high there. Look, so if you see this wick, there's the magnet. It's at 109.294, this high. Came up to 109.270. So very close, however, it's still not a higher high. So have we rejected that? But if you look at today, 12 hours left in the candle, we've actually broken higher after Friday. And you'd expect this when equities sell off, money flows into the dollar, and DXY is a basket made up of the US dollar, euro, Japanese yen, Swiss franc, and possibly another few, but they're the main ones. We'll look at the euro next, because DXY is made up predominantly of the euro and the dollar. Let's see how this closes. If we reject, I'm still expecting a pullback, and this 5-wave count to be complete. However, if we break up here with momentum as the market sells off tonight, looking for a new high, 110.251, for them to reassess, and is this 5-wave since we've started back here in January of 2021 over and now having a pullback. It's going to be interesting to see. Overall, still very bullish. I'm just expecting a pullback on the DXY because look at that. That's a monthly. Look how bullish that is. 20%. It's a fair bit. So expecting a pullback into these regions. Back down here. Possibly here first level and lower. Depending. But this is pretty strong, so it may only pull back to this first level. And then from there I'm expecting to go up to 120, possibly the coming years $160 a barrel, as they pretty much price people out of oil and petrol, and probably therefore force electric vehicles onto us. A lot of countries are making talk around, making them mandatory by certain years, so it wouldn't surprise me. Everything works, and it all works in sync. However, that's 5, 10, 15 years from now, 2030, wait and see. But for now, look for this pullback. Oh, sorry, I was just off track there. We're looking at the dollar. This is oil. Sorry about that. But yeah, the dollar, if we don't get this pullback, or once we do, still expecting much higher dollars. And you'd expect that, as I've said, if equities sell off, the dollar being the world currency and the reserve. Yields we're still been watching for a lower move. Don't know what's going on with that. Still trending, and we broke this high. Let's wait and see. Still overall looking for a pullback in yields, which means money would flow into bonds. And if equities are selling off, bonds usually are a place of safety. The week last week closed out quite bullish. TLT, you can see here, low, high, low. That's obvious. High, high, high. Look at the wicks. The bodies closed lower, however, but the wicks actually reached higher. But more importantly, to confirm if this is a lower high, this needs to go, make a lower low again. But it hasn't so far. We've closed quite bullish, so are we going to turn around? Money flow into bonds, which means yields will go lower, as I've been waiting for. Dow Jones, much exactly the same as the futures, the S&P, and we touched on this. Like, this is why I love the charts. Look at that candle. Look at that. That is so bearish. So bearish. And look at the follow through. $3.86 down for the week after all these weeks of consecutive price action to the upside, just shy of 15%. So, as I said, technical definitions of bear market, we only just entered one. Remember, it's 20%. On this chart, we actually didn't get there, which means for those that are waiting for a technical definition before they sell, they haven't sold, and they're probably still holding, thinking that, yep, new bull market, we're making new all-time highs. Remember, overall, lower lows, lower lows. Yes, this is a higher high compared to here. Correct. Equal high to here. Lower high to there. Lower low to there. Lower lows to there. And there. And there. The all-time high. So it needs to break a few more highs. Now, when you also consider that is January. So on a 6 monthly basis, well actually it's August now, so 8 month, the overall trend is bearish. But if you're looking at it shorter term, here, from June to August, 2 monthly outlook, it would be bullish. However now, with that sort of a candle, you would be reassessing. Expecting a follow through, being that it's wave 3, and we're looking now to break through 31875, 31717 on the Dow, first level, because that's the previous next swing low. If you look here, swing up. Then from there, 31073 to 31014 region. And then breaking these lows here to this most recent low. And remember, 5 waves within wave 3, so that's 1, 2, 3, 4, 5, something like that. And remember, 3 being the longest wave, you have 1, 2, 3, 4, 5. The coming weeks will tell. My bias is significant move to the downside from what the charts are telling me. It's still lower highs and lower lows. We won't touch on the S&P cash index. It's pretty much the same as the futures. It's exactly the same actually. Nasdaq, much the same. Exactly the same really. Lower highs. Yes, we made a higher high here. Just. That sucks a lot of people in. Next high hasn't made it yet. So same thing. Since June, bullish. Since the end of last year to January, bearish. Same as the other indexes, expecting a follow through 128087 to 12062 region, and then moving in through 11878 to 11756, and then 11037, this most recent low on 23rd of June, 16th of June. This is also wave 3. So 5 waves of wave 1, 3 waves of wave 2, 3, 5 waves, 4, 5. Depending on what the nature of wave 2 or 4 are, in the minor time frame of the Elliott wave count, this could move quite significantly lower. Russell, exactly the same, looking for it to follow through the 1790, 7784, breaking this low on the 16th of June, the wave 3. Long bond, yields dropping. I'm expecting a turnaround in this for wave 2. Remember, the long bond moves the same as the bond itself, so bullish bonds to the upside. You expect this to follow through up into here. And now a quick look at crypto. I made a bold move and sold all of mine in the last, actually yesterday, because I'm quite convinced that this is the next big move, being wave 3, and I'll be looking to buy much lower in crypto. So XRP, looking for it to drop back into 25 cents and below. Bitcoin, looking for it to drop into 16,500 area and possibly 12,000 and lower. Ethereum is much the same, break this low at 1,000 and possibly 700 for 440, maybe even as low as 300. That's a big move. Is that 80%? Yeah, maybe not that much. We'll see though. Once selling starts, people really, it just blows like a snowball. It just grabs more and more snow as it picks up speed. People become fearful, and fear is contagious as a flow-on effect, and you'll see it all in the news. Newspapers, media will be talking about possible record days sell-off in the markets, and we've already had one back a few months ago. This will be, I suspect, much bigger than that, being that it's wave 3. So all in cash currently, all in cash. Make sure you're with reputable banks with insurance, just in case, because a lot of places can go bust, especially if they're highly leveraged and owe a lot of money and they can't pay their debts. So yeah, hope you enjoyed that. Take care, and until next time, look out for these moves. So just to recap, gold, expecting it to turn around for a pullback, break the low at 1681, reassess. Silver exactly the same, expecting a turnaround up into 22.57, breaking of 18148, we'll reassess. Oil, expecting a sell-off, continuation of the downside. UK oil the same. Dollar, expecting a pullback in the dollar. However, with this sell-off in the markets, we could be making a new high. If that's the case, we'll reassess. 10-year yield, expecting this to roll over. Money flowing into bonds, yield selling off because they're the inverse of each other. Dow Jones, expecting for this momentum to follow through in this coming weeks. And if you look here, you'll see that these are what we're looking at, high risk news announcements for this week. US non-farm employment, it's jobs, it's a big one. And then later next month we have, of course, the federal funds rate. Are they going to aggressively raise again? Some are expecting 1%. If that's the case, the market will really sell off coming into that news, I would expect. So yeah, hold on to your seats, hold on to your seats. This is why I do these videos. I hope you've taken some notice and prepared. If you're highly invested, I'd consider definitely taking profits now. Don't take it all off the table. A percentage that you're comfortable with, then you can invest at lower prices. Don't sell it all if you don't want. If you've been dollar cost averaging, but even 10% of your portfolio you sell. Wait for a 20-30% drop, rebuy, or just sit and take profits each and bit by bit, like up to you. But what I'd definitely recommend is have a plan so that you don't get, oh crap, and make a rash decision. And as I always say, be measured and poised, because being positioned correctly can really make the difference between a few years, a few months, paying this, paying that, and just being comfortable or being up at night stressed. So that's what it's about. It's about positioning you and your family so that you're in good stead. So anyway, take care. Till next time. Hope you enjoyed that. See you.